Greetings, Earthlings. Another day slumming it. We're in a ghetto of low volume, reflecting geopolitics. Some good news, I guess, out of Europe. Better performance than had been expected or anticipated in Germany. So we're watching Monosec Medical and Billy B also looks very good today. To explain, looking here at NEO, this green line here, green dashed line, reflects the high that NEO reached during the extended session. In other words, the pre-market, and after the close yesterday. The red line down below is the lowest in terms of a range. And we're live. That happened quick. I'm going to keep my feet off of the gas pedal and see how things shake out. That Billy B's looking pretty darn good. The other one I'm interested in is down here, United Maritime. IQ, this one right here, also looking good. Again, with the volatility in the market, I'm going to sit on my hands maybe for the first 10 minutes and see how things shake out. So, as you saw, the number one leading stock by volume, I arranged these left to right on the top based on the pre-market volume, but you can see ONCS jumped up there and now is reversing, as is ASP. Billy B's holding. That was the one that during pre-market I became most interested in. They had the best pre-market chart. United Maritime is a latecomer, but it looks great also. So we'll keep our eyes on everything, but specifically on Billy B and United Maritime. See if they continue to ramp. Music is Courteous Afro-Celt sound system. Nice blend of Celtic music and Senegalese music. Just before I left Seattle 20 years ago, I went and saw Afro-Celt sound system at a WOMAD concert. WOMAD stood for World Music, I guess, and it was sponsored by Peter Gabriel. And this was a memorable performance. United's losing some steam down there. It's got 1 million shares already traded. And Billy B. Wow. We're 3 minutes into the session. I said I was going to wait 10 minutes. I'm waiting. The market yesterday wasn't worth trading. probably wasn't worth trading most of last week, and it remains so. Check on the SPY volume right now. Yeah, the SPY is showing it's dead. Down here, 133 shares being traded at this moment in the 3-minute chart. So, no wind for the sails again. There goes Billy B. So the second leading pre-market was this ASP Isotopes, and it's dumping. Sometimes pre-market is also, I'm going to say, rigged by high-frequency trading, AI, which takes off at midnight and sets the pace for trades before the pre-market, and then doesn't have the same support after opening. That often can indicate also a short squeeze. So people that had shorted the stock want to get out of it. They sell, it jumps up, but then it collapses. Billy B. Jumping back up there, making a nice move. Let's see what the SPY is doing again. I explained on Friday, institutional traders, all traders, watch this blue line called the VWAP, the volume weighted average price. And so it's kind of an indicator of whether a stock generally is going up or going down. And institutional traders, I guess the machines, their performance is measured by how close they can stay to the VWAP. So it's probably the central indicator on charts that people are trading against. You can see that Billy B's is almost vertical right now. In the pre-market, I'm watching not only the high of the day, denoted by this green line, but also looking at which VWAP line is headed north versus the ones headed south. Again, these are 3-minute charts. So Billy B wants to break out. It's at 14.91. It wants to go to 15. It'll hit 15 and then usually it'll back off, looking for whole numbers. 15.08. It's teasing us. It's teasing us. Let's see if it goes back down or continues up. If it continues up, that's great. So right here, 15.17 is a resistance zone. That yellow line shows that that's where resistance is. It's another indicator that it's resistance and support. And right now, we also see that Billy B is trading quite a ways off of the VWAP, which means it's overextended. Is it going to break it? Is it going to break it? Yep, it's going. It's going. It's going. It's a good sign. So the next place it wants to head towards is 15.50. If you're seeing the profile of Bill, that's not because I'm real proud of my profile, but I'm looking over on my monitor to the left, which has all of the mini 3-minute charts that I was showing you before. See how they're doing. Billy B is still doing pretty damn good. But it's got the highest volume. Neo's perking, Chinese electric vehicle manufacturer, but it does this every week or every day virtually. It goes up, it goes down dramatically. It has lots of shares in the float, which makes it difficult to say that the direction it's going in is real strong, because there's lots of shares in the float. There's presumably lots of owners of that stock, and they also Chinese stock, so it's trading via Chinese market also, which we know right now is experiencing a lot of domestic problems. So where there's a lot of float, in other words, a lot of owners of the stock typically moves kind of slowly and reactive, but it also stays in a range. So Billy B is holding or hovering right at that $15 mark. I usually look to trade between $2 and $10 stocks. I don't usually jump into a higher price stock beyond $10. The lower price stocks also somewhat reflect lower float. In other words, total share ownership. The float refers to the number of shares that are available to buy. So in the lower float stocks, when there's breaking news or good news or bad news, the stock is more reactive and makes bigger moves price-wise. And that's what we look for in order to earn some money. So higher float stocks are not as reactive. I'm not seeing a whole heck of a lot to trade. Show you NEO. So NEO just kissed the high of the day, and then it reversed. So these indicators, these lines you see across the across my charts, are indicative of what traders are looking at, but also largely, I think 80% of all shares traded in the markets, and this is throughout the world, are traded by AI, by high frequency trading algorithms. You can see watching NEO, it goes down to a specific range or specific, and then it bounces back up. Back to Billy B. It's 15 minutes into the trading day. Let's see if it takes off again. I do something called dip trading. So when it goes back down, if it's holding like it's doing right now, I'll take a trade, expecting it, hopefully, not all the time, but to resume and go up again. So you buy at the bottom, sell it a bit higher. Cracking, going down. It wants to go down and bounce off of the VWAP maybe. So, since not a lot going on, I'll do a little bit more explaining of my indicators. This is the 1 minute chart right here we're looking at. These are the charts I trade on. And over here on the right, I've got a 5 minute chart. Now, retail traders typically watch the 5 minute chart. I trade on the 1 minute chart because I basically scalp. I'm in and out. I take quick trades just for seconds sometimes, minutes some other times, but it's based on the volume I see and whether it's going in my direction or not. But it's more reactive, or I'm more reactive on the 1 minute chart. The 5 minute though is what the market's looking at generally. And on this 5 minute chart, you'll see these lines running across. That's a Fibonacci indicator, and it calculates the price action at different levels. These green lines are green for go, basically. And then the lines further out here, the white line, the purple line, those indicate again, and this gray line, when the stock is getting more dangerous to trade, let's say. And nothing's 100%, but that's telling us it's overextended and that may go back the other way. So the safest place to place a trade, according to the Fibonacci, is in that green zone, these green lines. These numbers here I preset. I'll show you what I do. I set the buying power that I've got. So I've got here $1 million buying power with a maximum risk set at 10,000. I can change that very easily. So what that does then is that gives me these numbers, which are position sizes. And I'll go over here, and it's just a general rule of thumb, but I will set my buying power, which is this number here, of units, by what I see on the pre-market Fibonacci. So that's position sizing. That's more important to me than whether I'm in the green zones or not. So that's huge, having that ability to see what I should be looking at as a rule of thumb for position size. And another stock that's, let's say, trading at this $15 level, which may be less volatile volume-wise, you may see that those numbers will be vastly different. So this indicator also calculates the volatility in the market to come up with these position sizes. So that's the 5 minute, and that's the Fibonacci. Fibonacci, again, is real important to me for position sizing. I preset my volume or my unit size for trades before the market opens. Today, again, for this, I felt pretty comfortable putting in 25,000 shares per purchase based on the Fibonacci. Down here, we have more granularity. This is a 15-second chart. What that's showing is the price action, again, in a range of 15 seconds. And, oops, that's very granular. Here is a 5-second chart. You can see basically the algorithm doing its job here. The smaller the increment in terms of the time period, it becomes very obvious that these trades are basically very symmetrical in terms of the price action. Yep. So hope that's instructive. And over here we've got the day chart, and what that shows us is this will show us up through yesterday's market trades, and like the entire market, it's all been going down. Yeah, So it of course is going to reflect the market on a daily basis negatively, as all of 2022 has pretty much presented. Again, you see these green and the golden or orange and green lines. Here's one just right down here. Those are, again, support and resistance. So when it comes down to here, that basically is telling us that this is a good launch zone right here. It'll go this basically on a daily basis. That's telling us that the stock will presumably go back, be headed back north. And in fact, probably this week, even with all the geopolitical problems, the machines are forecasted to resume a rise, temporary albeit, in the market for this week. That basically we'll see an uptick in the market throughout the week. Nothing dramatic, but and then up here what you see is again a level where there's resistance, where when the stocks get up that high, it's going to have trouble breaking that. So, as you can tell, I'm pretty enthusiastic about all of this. It's the lifeblood of the economy. Not just in, I'm trading here in the States, but it's the lifeblood of the psychology of the economy globally. And there's Billy B. It broke through the VWAP and is headed back south again. This RLX technology is kind of interesting. It's right now, it's got the most shares being traded. You can see it's all green. It's above the high a day. It broke the high a day. And on the 3 minutes, it's going in the right direction. The VWAP is in the right direction, so we'll keep our eyes peeled. Looking over here on the right, this is my watch list. These are the stocks I picked via my scanners in terms of possible stocks to trade today. And Billy B again is showing 16% increase over the day. Onsi, or the leading stock, and this is showing it's not as strong as it was this morning at pre-market, but it's got this stellar number for shares traded before the market. So market again is and the stocks at midnight, that's when the pace is set for the day's trading. And institutional traders jump on stocks between midnight and 7 o'clock in the morning, basically. At 7 o'clock in the morning to 8 o'clock in the morning, then retail traders come along, like that's what I would be, and look at what has had the volumes. And so when you see that this Onosec Medical Incorporated is showing the biggest gains on its price during the day up here. It's up 68 cents. That all occurred not during the retail trading period, but occurred last night. This gray area right here is the pre-market. So Billy B, and again it's headed south at RLX. It's lost some of its steam in terms of trading volume, but it looks really good. So, let's see if we can make a quick trade off of this. Quick dip trade.
Filled.
Well, I just lost 3,000. The reason I lost 3,000 is the commissions. I would have made a lot on that move had I have stayed longer.
Order filled. Order filled.
Not getting the best positioning for my fills. Again, that's the AI is positioning me unfavorably. $1,600,000 in terms of volume right now, which is pretty good. I am down $4,800, almost $5,000 on the day. Ooh. So up here on the chart, you can see a number, 3,000. Over here on the left is the actual broker figures. And there is a time lag between what you see up here on the chart, which is highly visible, and the actual price action that shows up with the broker. So what I want to be watching and timing my exits is down there with the broker's numbers. That's what counts. See if it is breaking down completely or it's going to resume its upward momentum. historically, it's doing pretty good. It's right below $2.30 at $2.28 for a high. If it goes down to breaks 220, might be time to bail. Take a loss. It's pretty damn close. But shares have increased. It's up over 3 million shares, so it's getting a lot of eyeballs and a lot of trades. So when you go to my YouTube, you see WDK. That stands for We Don't Know. Nobody is a very good predictor, it turns out, of what the future holds, or what the psychology of the market may be, or even how the computers, the AI, the algorithms that are creating and reading the feedback from their created price action. AI created psychology, how it's going to go. So I like to compare this to watching a bobber or a float on a fishing line on a pond, and the price action is like the bobber or the float flipping up and down just to tease the fisherman to yank the line, either to catch the fish or to lose the fish. That was a good sign. The price just jumped up, gapped up real quickly. But notice where it goes to, right to where my price was set. That's not anything but programming. When I realized that, then I realized what I'm actually trading against. I'm not trading against other traders or the market or people in China or in New York. I'm trading against algorithms. My trading was miserable for years because I did not recognize or see that pattern, which you can see now that I'm pointing it out, that we're trading against machines. So the economies are basically, not in the future, but now, run by AI. Your pension plans, your stock portfolio, and the AI is sophisticated enough to aggregate orders placed at about the same moment. There you go. See that? It goes up and then it kisses. So it's not going to let me earn anything until it breaks through. It'll break through and then it'll drop right back down real quick before I can take my profit. You watch. There's no magic there. When I realized that, my trading improved enormously, or my profitability improved tremendously. That's nice. Now we're just about break even right now on the day if I was to sell. And I'm thinking it's going to go and try to reach up to $2.50. Stair-stepping its way up, tiptoeing. In 5-cent increments. So when you realize that you're trading in a casino and the house always wins, the investment banks, the hedge funds that sponsor something called the dark pools, the dark money, they front run your trades. They jump in line before your trade is actually executed. In less than the blink of an eye, literally. And that's how they make money. Financial criminals run the economy. See how quickly it retreats? So when Toto, in The Wizard of Oz, pulled back the curtain to reveal that the wizard was from Kansas and was a charlatan, snake oil salesman, that's who's got your pensions. Cheerful, huh? I'm real tempted to take a loss, and I presume you might be tired of watching this too. It takes some concentration. Before I said 220 was the spot to look for. Just notice now that the stock had in fact kissed $2.20, and then it went back up again, didn't it? If it breaks that $2.20, I'll pull the plug on this. Speaking of Peter Gabriel, he's performing here on the Afro Cal sound system. So I hope this has been instructive today. You've enjoyed watching, even though there isn't a big flash of cash that was made. At least it is informative to learn what is, as I said, the psychological lifeblood of our economy run by machines. Don't have nightmares tonight. Next thing coming is central bank digital currency. It's being rolled out. With that, they can tell you, or they can decline authorizing your purchase of Jack Daniels if the preferred whiskey would be Wild Turkey. And that would, of course, be dependent upon the lobbyist for Jack Daniels versus Wild Turkey. God, I'm cynical and skeptic, aren't I? I'm also old. It's holding in there, which hasn't dumped. That's a very good sign. In other words, it's consolidating, I guess is the best way to put it. Like when I was a kid, there were airplanes that were made out of balsa wood and had a propeller on the end of a stick, two wings, or the wings, tail, and a rubber band, and you would twist up the rubber band via turning the propeller with your finger. And that's consolidation, and that's what you see what's going on right now. So today you've learned about fishing on turbulent ponds and bobbers, and also as a metaphor, you're learning about consolidation and witnessing the twisting of a rubber band airplane, its propeller. I'm just full of interesting shit, aren't I? Not interesting? It just kisses where my order is placed at. Go figure. So I just added more to it. Price, or the location, should have dropped down. Went from 300 shares to 450. Nothing happened. Again, it's fixed. Fixed as in rigged. Adding to the position size should create a different location for the aggregated price. It's called averaging down, and that did not happen. I added 150 shares. We should have seen that price drop down. And in dropping down, would have been able to make at least a micro change in the opportunity to make a profit. Now it's getting ready to hopefully jump back up there again. Again, like a rubber band, it's stretched southward, like it's doing right now. And then hopefully it will stretch back north, yeah? So I look for kind of a line right here of where the bottoms or the tails of these candle bodies are. So the body of the candle is the solid portion. This bottom tail is basically reflecting that price jumped. And then the top of the candle are called wicks. You can kind of watch here all the wicks or all the tails were lined up. All of the wicks or the tops of the candles are lined up. Same here. And again, algorithms. So fishes aren't great. Would have been better had I have traded this earlier. These candles here that you see, these last two, when they just look like a spinning top, no body, that's called a doji. That means indecision. Like that, right there. It can go either up, it can go either down. It's been a nice looking chart until I jumped in. As I started out today saying, it wasn't looking like a great day to trade. I think I'm going to pull the plug on this and call this a loss.
Order filled.
Done that. So on the day, lost 17,000, but it was a great loss. You got to see or learn a lot, I think, about what trading signals I'm watching. Now let's see if it just doesn't laugh at us and jump back up there real quick. Now I'm going to post this on YouTube in a few minutes, and I hope you enjoy my great loss today. Ciao and arrivederci.